Are we doing this? Are we on? Is the stock market on today? I think. Yes. Okay. Good morning, everybody. Happy Thursday. This is the morning show. This is Stock Market TV. Spencer, JC, Steve, full crew with you today. What's going on? I don't know. You tell me what's going on. We're up. We're actually no. We're down a little bit. We're up. We're down a little bit in the futures. Down a little bit over in Europe. I don't know. Bitcoin, crypto is, dare I say, unchanged, borderline unchanged. Not a lot happening this morning. Kind of a quiet morning, actually. Not a lot in the way of economic data. Don't we have to worry about that? Not that we ever do worry about that. So we'll see. We'll see where the show takes us. We'll have Chris Verrone on today. He is the head of technical and macro research at Strategas Research Partners. He will join the show at 9. We'll have Mr. Glick. We'll have Mr. McLaughlin. I guess that's the plan, right? Is that what we're doing here, chat? We're all good? Everyone's having a good Thursday so far? I think so. All right. I got JC. I got Steve. I got you. I got me. Let's smash the like, please, and let's get started. Who is in charge of starting the show? Someone do that.
All right, welcome, ladies and gentlemen. Mr. Strazza, how are you, sir?
I'm doing great. How's your Thursday morning?
Were you partying last night? When I spoke to you, it was a little late. It sounded like things were a little rowdy out there. Were you out?
Nope, just a nice dinner. Not partying.
You were walking around. There was some noise. There was a ruckus in the background.
Wait,
it was a restaurant.
Oh, okay. There you go. See, it sounded like a restaurant.
Restaurant on a weeknight? Wow. Steve lives dangerously.
When do you go to restaurants?
I don't know, weekends.
It's amateur hour. All the amateurs are at restaurants on the weekends. You need to go during the week. Strazza, school him.
Well, especially this time of year, we're trying to go once a week, so it's usually a Wednesday or Thursday night. And if we were to go on the weekends in February in Key West, we're not getting in anywhere good.
Yeah, come on, Spencer, get with the program. Come on.
All right.
Busy season here.
Dude, it's amateur hour on the weekends. It goes all the way back to college. What was the best night in college? Tuesdays,
Thursday.
Wednesdays.
Oh, I was gonna say Thursday.
Thursdays were good too. But like, if you're out on a Tuesday, like you're there to party. You're not messing around. Like Saturday, people are like out because it's Saturday night. I might as well go out. If you're hitting it hard on a Tuesday, like you're not right. And then even like in like when you get to work and you start working, like in New York City, what were the best nights? Like Tuesdays, Wednesdays, Thursdays, right? Saturday night, you can't even go out in New York City on Saturday night.
Billy says weekends are for home. I like that.
I like that too.
I like being home on the weekends.
I agree. Or like a day brunch sort of situation. That's okay on the weekends. Like a
morning
day
things. Morning things are nice, you know.
Saturday night, Spencer, amateur hour, bro. Come on, get it together.
All right. I don't know. Sorry, I guess I'm an amateur over here. Sheesh.
Clearly. No, all right. Let's go.
Get there.
All right. Is amateur hour on the stocks today? Let's find out.
All right, ladies and gentlemen, we've got the Dow futures this morning not doing much. You know, I feel like over the last couple of weeks, we've had swings in both directions, pre-market action, after-hours action. Today, relatively muted compared to what we've been accustomed to. Dow futures down 70 points, 66 points. S&P 500 futures down 12 handles. So that's 20 basis points. NASDAQ 100 futures leading the way down 1/3%, 70 points. To the downside, 19,550 there. 30-year bond futures down a little bit with interest rates inching higher, just above 116 on the 30-year futures. Crude oil futures down 0.5%, 67 and 67.30. You got copper down about 1/3%, 483. Strength there remains very impressive. Gold actually positive today, slightly, 29.50, approaching that 3,000 level. Silver down 1/3%, 33.63 with the VIX still above 24. Haircut on the VIX yesterday, but still relatively elevated here. Over in funny money land, Bitcoin 82,007 1/4, so down almost 1,000 points today. which is 1% to the downside. You've got Ethereum. I mean, what a disaster this thing has been. Below 1,900, down almost a full percent this morning like Bitcoin. And then Solana 126, holding that key 120 level, flat on the day. Total crypto market cap 2.66 trillion. How are we thinking about this morning's futures?
I'm just going to keep saying it. Step one, man, we just need back-to-back green candles.
In what?
Like a string of consecutive updays in the
Like
stock
what?
market.
In the S&P, yeah.
Stock market. It's been since the peak last month. It's been almost a month. They can't get back-to-back updays. That's a problem. You're not going to bottom. You're not even going to have a tradable low without that. So today,
dollar down a little bit. Dollar down a little bit more again today, with gold up a little bit.
So to be clear, today could be that follow-through day that we're looking for. But again, like you would have liked to see a little bit something from futures here.
The transports, you got a little bit of love late in the day.
Yeah, not much.
German DAX is down almost a full percent right now. German DAX futures. I'll continue to say it. It's remarkable the lack of volatility that we have seen in the bond market, considering what we've been seeing in the forex market. So that continues to stand out. The strength in copper for sure also stands out. I said something yesterday, Strazza. I want to hear your thoughts. I said something yesterday in a meeting. I started out the meeting. I said, "All right, guys, this is like our weekly analyst meeting." It's like, all right, guys, I'm looking for longs, I'm looking for shorts, and I'm looking to sell iron condors. Like,
Yeah, I like that.
right?
I'm
Like
fine with that.
that's where my head is at right now. And I wish Sean was here to chime in on that, but that's where my head is at. Long, short, iron condors. If you're going to be buying calls and puts, I like financing those. Premiums are expensive, generally speaking. There was a trade that Sean put on yesterday on a retailer. Bought leaps yesterday. Leaps on a retailer yesterday. Jeff Mackey name, but that's where my head is at. Do you like that? Longs, shorts, and iron condors?
I'll take a shot at a bounce, like I said, on a second green candle. Happy to get long some things. I think you have to be really selective still, but I'm definitely looking for shorts.
I'll tell you what. These iron condors, they're not going to like make our year, right? We know that, right? It's a high probability of success outcome, and you're going to make a little bit of money. But here's how I look at it. If you could do that once or twice or 3 times or 4 times, each one of those times, depending on your position sizing, gives you a free trade or 2 free trades in the future where, let's say a month from now, a week from now, whatever, there's an opportunity for a YOLO trade, right? Out of the money calls in whatever, in some piece of shit, right? That YOLO trade that normally I'll be like, oh, I don't necessarily need to lose that money. Like I want to be selective here, be more. You could YOLO more comfortably knowing that that's a free trade that you put on because of that iron condor that you sold 2 weeks earlier, right? Like that's how I think about it. Is there anything wrong with thinking about it that way? It seems very logical. You see any flaws in that thought process?
No, and I think you can game these strategies a little bit here too. Like I don't love putting on. It's like 4 legs in iron condor, right? It's a lot. There's a lot going on there.
Yes, but the reason that it's 4 legs, and for those of you who are not familiar with the iron condor, what you're doing is you're selling it out of the money call and you're selling it out of the money put. So you're naked both calls and puts if you did that. And you could, right? You could do that. You could make money. But in this environment, I would sleep better at night and I would feel a lot more comfortable if we hedge those positions so that we're not just naked in both directions, right? Particularly in this type of environment, particularly on a single stock, right? So these are things that I've learned over the years, and then so you want to hedge it. So instead of just selling it out of the money call, you're buying a further out of the money call. And then instead of just selling it out of the money put, you're buying a further out of the money put. So you're hedged on both sides. So you're taking some of the money that you're making by selling some calls, and you're taking some of it and you're buying further out of the money, which are going to be cheaper, by the way. So you're still keeping a nice premium there. So yes, could you make more money if you're not hedged? Absolutely. But that's not the point of this trade. The point of this trade is to make a little bit of money. So it might sound complicated that there's 4 legs, but that's the way to do it. No?
Look, I think if you have evidence of a tradable low, maybe you could sell a put and help finance a long put, do like some short vertical spreads too.
Totally. 100%. That's exactly right. Right. So what you're doing is you're selling put spreads you're selling call spreads at the same time, right? In an iron condor. It's the same thing, right?
We did it in Microsoft on the Flow show last week. It was pretty cool because it looked like a top, but I was looking at it, I'm like, Sean's probably going to bounce back to this VWAP, right? So why not let's sell the puts, but also buy the puts, and then let's take the short puts off after it retests the VWAP in case it rolls over. So I like stuff like that. You do, maybe you have to get a little bit creative, but I think you have to be extra tactical, right? And on top of these trades too, because the market starts moving in a certain direction, that strategy might not be the best anymore, depending on what you're doing. I don't think selling puts naked right now. I think that's a crazy idea.
Well, if
I would not do that.
if we're collecting if we're collecting $2, let's just say hypothetically, right? As soon as we collect that $2, I'm putting in the good till canceled order to cover that at $1, right? So as soon as we can recover half, I'm out.
Yeah,
Right.
like
So
that's a good
and
one.
that's like the best thing ever. Like you laugh about it too. And Sean does also. Like we're doing something else, like we're in a meeting, or like we're talking about a different trade that has nothing to do, and then all of a sudden you hear bling. It's like, oh
Yep.
shit, I took profits on that. Nice one for the good guys. Right. So, it's really not that complicated, especially when it's part of it. So you guys in the chat, are you familiar with iron condors? Are you putting those on? I want to reiterate why it is we're even talking about this right here, right now. You see, in our experience, this is the type of environment where you do that sort of thing, right? When the VIX is at 10 and there's a ton of complacency and premiums are super cheap and there's no volatility at all, you're not getting paid to put these types of trades on, right? So it's not
Yeah.
worth it, right? So you're wasting your time, right? I mean, people do that, but it doesn't make any sense. You want to put these trades on when you're getting paid to put these trades on.
I got to say something. Any strategy that has unlimited risk or like high risk, like selling puts or anything like that, like Colin makes a good point here about getting blown out of iron condors. I don't want to do in this environment. This is the kind of environment where markets absolutely collapse in, right? So I'm going to be extra, extra careful to not put on any trades that can end up in a disaster. And I know experienced traders are going to say calls are so expensive. Why would you make your long bets just buying calls here? I'll tell you why, because I know exactly how much money I'm going to lose if I'm wrong. So I still don't think that saying, oh, implied vol is so high, you can't be long premium. I think you can be long premium. I actually think it's a pretty conservative strategy at times.
I got to tell you, Steve Strazza and Sean have completely different approaches to this, right? And I'm sitting here and I get to watch the magic of the two of them do it differently. Sean no shot, no way, no how will ever buy the type of expensive calls that Strazza does. Never. He just won't do it. He'll sell a call with it or sell a put. He'll finance it somehow. He just won't do it. That's just him. Strazza will do that all day without even thinking twice about it.
Well, the way I learned it is nice things cost money, JC. You got to pay up in life.
Listen, if you want to buy cheap uni, good luck, right? Like, if you want to drink cheap champagne, like what even is that? Like, like you get what you pay for in life. There's absolutely no question. And honestly, I agree with both of you. Like Sean's not wrong and you are not wrong. Like that's the beauty of the market. Like you're not, and that's okay. You guys are good friends. Like you're not even that fighting about it. Like you guys are just,
we don't fight about it.
Nothing wrong with that.
We don't fight about it enough, actually. Almost never.
Yeah, because you guys know that you have different approaches. So why even bother arguing?
We understand that both make sense. I think Larry, shout out Larry, makes a good point. Yes, man, it is a messy market if we're talking about strategies like this rather than just coming on here like, what should we buy? Right?
Well, right. So these are good strategies for messy markets. So yeah, when in Rome. You know what I'm saying? Like, I'm going to be in Florence getting fucking Chinese food. Like, that doesn't make any sense.
Don't do that. No.
Right. That's what I'm saying. That'd be silly. Yeah.
Tariffs. Oh my God. Tariffs in the news today.
What do you know? What do you know? Tariffs in the news today. All right. So I want to be selling. I want to be selling premium. I want to be collecting income. Those are the types of things that we're doing. When Sean comes in, definitely want to talk about that. The dollar continues to decline. I'm really impressed with the copper China sort of situation. Reiterate something that you said once, and you were spot on, Strazza, where you were talking about how these Chinese tech and internet stocks are not trading alongside the American tech and internet stocks. They're trading with copper. I hadn't quite thought of it like that until you said that, and it's stuck in my head. But it's true. If you want to throw up that slide too there.
And JC, you got these really nice multi-year bases. They do look different. Right, one experienced a much steeper drawdown, but you got nice multi-year bases. This is one of them in FXI, but copper too is working on a big old base breakout here. If those two things happen at the same time, I'm saying you have to be full bull China and Baidu all day, baby. What a chart.
So,
Look at this.
so I'm not going to be here for Chris Verrone's interview, but for those of you guys listening out there in internet land, I got to tell you what a treat it will be to have Chris Verrone and hear from him. This is a guy. Chris Verrone does a ton of work, and he's got a great team. He works with Todd Sohn and some others, so they do fantastic work. I promise you. But in addition to that, Verrone gets around. Like, he makes the rounds. When I talk to him, oh, JC, I can't have dinner. I'm in Geneva. Or, oh, man, I'm sorry, I can't make it. I'm in, Brazil or whatever. Like, this guy's all over the map. So the perspective that he gives is not just from a technical standpoint, but, I mean, these are boots on the ground. Like, he's visiting these institutional customers IRL. That's what the kids say, IRL, Strazza, in real life. Yeah. So his perspective is great. So make sure you ask him about those conversations and what he's hearing when he travels to Asia in particular, the sentiment there towards China, when he's in Switzerland and London and the types of things that he's saying, because he gets around, he travels, he gets out there. It's really impressive. Really impressive.
Looking forward to that conversation. That's going to be awesome.
All right. What else stands out in this market, Mr. Strazza?
I wrote yesterday about how it's really like a gotta see it market. And the thing I'm thinking most about, I think a bounce is undeniable. It's coming, right? But how long does it take? And what does it look like, right? Like, what is the quality of that bounce if and when we get it? And there's a couple ways to measure it. The simplest way, guys, is you just fib out the current drawdown, right? So the decline off the February highs, if you just fib it, for me, like, I got to see 38%. If you were to get 38% and the bottom was yesterday or whatever, the intraday lows from the day before, if you get 38%, it sends you right back up to that neckline. Thanks, Fonz. Which is where we broke down at the January pivot lows, also that August VWAP that I keep talking about. And it's also the 38% retracement coming from the opposite direction on the advance off of the August lows. So that's really what I want to see, 575 and then some. Any sort of material bounce is going to get us back to and through that level. It should actually overshoot it, right? So I'm looking ahead and just waiting to judge these bounces when they come. And you know what? It's information that it's taking so long.
How do you feel about 240 basis points of alpha from semiconductors yesterday? Is this part of what you're saying? You got to have a second day. You got to have a follow through. Today might be it. Is that what you're saying? Like that kind of stuff?
Yeah. I mean, you're talking about
like one day doesn't make a trend. It's gotta stick it. Today's Thursday. It sticks the week, right?
They had one green candle, and then they're down pre-market today. So
right. That's what I'm saying. So when you were saying before, that's my question. When you were saying before, how the market needs to string more than one day together to get going. That's a good example in the semis, right?
Yeah, 100%. But we are at washout levels, right? So you should be looking for and expecting a rebound rally. We haven't seen this type of deep oversold conditions in certain indexes in 4, 5, 6, 7 years. Look at NASDAQ 100 futures. Rarely get that oversold. So I think you do have to be prepared for a bounce, but then you got to judge that bounce. Those are the next steps for me. Get Kenny on.
All right, do it.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Ooh, Mr. Kenny Glick, dude, you've been coming on for so long, and this song keeps coming on. I still get fired up every time. Every time it fires me up.
It is good. It is good. Thanks for whoever wrote that song.
Definitely wasn't me. It definitely wasn't Spencer. That we know.
What's up?
Nothing. Kenny Glick in the house. Are you going to the party? Everyone's in the city tonight partying with Ritholtz for his book launch. You going?
No. I didn't get my invite. I don't know what's up. I must have been on the B. I'm on the B list.
Dude, that is going to be some party. I'm not going to be able to make it into the city today. But that's going to be a hell of a party. So big ups to Barry Ritholtz launching the book.
Cool. Give me an autographed copy.
You could just go over there and get it yourself. You're friends with them also. So Kenny, Mr. Permabear over here.
Yeah.
You're getting a little bit of your little shaky breaky. People are bugging out, man. People are bugging out. everybody's telling me the recession's coming, both in the U.S. and in Europe, right? Recessions for everybody. You get a recession. You get a recession. And I don't know. Do we continue to see the selling? Are we betting on the downside, or we're looking for that VWAP crossover? Or in an environment like this where there's not a lot of volatility, how do you think about it?
Well, yesterday was we stayed focused on those symbols, and it was a clinic on patience and having to move on, because I was sitting there with that Groupon short for a good half an hour, and the stock just did not want to cooperate. And I said, hey, listen, if it's not going down, let's join the winning side. I didn't buy it, but I covered, and it, basically didn't do anything but go up. And it was odd, but Stitch Fix, on the other hand, we crushed it. The stock rolled over. He got an earnings reversal, the trade that hasn't failed in 3 years, the 1 minute multi-day VWAP reversal trade. So, yes, staying focused on the earnings reports. Again, Oracle back in play. There was a ton of activity yesterday. I mean, that's what's amazing about the market.
Stitch Fix.
Yep, Stitch Fix, Groupon. You had Trump was kind of dead. I was looking for a fade there. We got broke 20 for a second. But there was just like Lunar woke up. A lot of the quantum stocks caught a bid and were ripping. So there are a lot of stocks oversold where you're going to get, plenty of opportunity to the upside. But what I'm looking at as far as the QQQ, this is my main barometer of the stock market. We haven't been able to breach a 5-day VWAP to the upside. So we're still in a bearish environment. Until that happens, and as the levels are getting compressed a little bit. So next week, the extended VWAP that I look at, it's going to be a little bit lower, obviously, because we've been sitting here at a little bit lower for the last 3 or 4 days. But we still have not been able to breach any area where I would say, look for a bigger upside move. So UVXY doing its job by tipping us off that the market's still a little nervous. We hit the 30 on UVXY. That looks like that was the top. But again, I still feel a little nervous, and I'm also leaving town. So be afraid, friends. When I'm on an airplane, when the market's volatile, things get crazy, and tomorrow is
I feel like I hear that all the time. Like, it can't be when everybody, like, there's so many people that say that and go on so many flights. Like, that actually can't be true. So
I know. But for me, it's true. The entire, I am, as Batnick said, I am the one. I am the one. It all runs through me. It all runs through me. But it is really uncanny since for 30 years now. I used to not want to go on vacation because I would think something bad was going to happen, or good for that matter.
I was like that too. I've been there.
moves.
You got to be there, and then you got to get over it and be like, wow, the market is literally exactly where I left it. And I read 2 books, and I got a suntan.
Even worse, you start to you realize that, no, wait, every day is the same exact day. It really is. And we were talking about that yesterday. How do I prepare a little bit different when the market's going down or up? No, I just prepare for some boring days and some chop days. So after we have the turnaround Tuesday, usually we have Whip It Out Wednesday. So yesterday was Whip It Out Wednesday.
Whip It Out Wednesdays.
Yeah, it was time for the market to put up or shut up, and it really did. So you had the gap. They sold the gap, but then the buyers showed up again. So Whip It Out Wednesday was a success, and now it's thrash them Thursdays. I don't know what the hell's going to happen today. So thrash metal Thursdays. I have no feel for this market right now because we're in limbo. But we go right back to just trading earnings and trading stocks that are in play. Somebody just mentioned CRVO, been in play for the last couple of days. Yeah, all over the place. Some stock, Joe Femi, Joe Femi, but FEMY. No idea what this is. Ripping all morning, but just crashed. So there's always there's always something for the day trader to do. That's never a problem.
Give me one name right now this morning.
You know what? It's so quiet out here, but I'm looking at quantum stocks because you got one that reported. So QBTS and Dollar General. I haven't looked at it yet, but DG had earnings. It was up, and now it's just fading away. So I'm looking for a DG short probably. But QBTS, now that Rigatoni popped on the earnings, I'm going to see if this thing just holds its bid. Right?
RGTI, the old rigatoni.
Yeah, RGTI actually popped on earnings. So, QBTS just right there along with it. They're all basically the same company. So
you're looking to short these on the pop this morning.
Yeah, probably. But yesterday's shorting, except for Stitch Fix, really wasn't too great. But I'm looking at those levels on the Qs. It's very important to see where we go from here. It might be, like I said, it might be an inside day, which means we're just going to stay inside the last couple of days' activity as far as the candle is concerned. But if you guys are bullish, you need the Qs above 477.50 today, And then that recent high of 481 looks in play. And then you also got Path, Kathy Woods, another disaster stock, PATH, one that just let us down continuously. This is one of the only ones that tried to come out of the Andy Dufresne pattern and completely failed, and it's back in the muck. I am looking at it to see if there's any life. It sprung to life in the aftermarket yesterday, back in the 10. So Path and also Sentinel, same kind of stock, a little cheapy stock, but Sentinel looks a little bit better. They got washed it out yesterday. This one looks a little better on the upside. So yeah, there you go. There are a few other names.
Kenny Glick coming in hot with the names this morning. Dude, Kenny, I love it because you're looking at stuff I'm not looking at.
Kenny, what do I have to do to get you into ASTS again?
I'm waiting for everybody to hate on it again. Get under 20. I'll love it. But everybody got super bullish on it again, and that's why it becomes dead.
Spencer, are you a bag holder?
No, of course not. But I thought this was a zero, and that was like 6 months ago, and it's
one is
still holding up.
That's the most impressive one out of all of them. So
right, that's my point. I've never owned it. Right, I'm just I think it's interesting. Right.
Yeah, wash it out under 20 again. I want to buy that one. That one has fought back every time it's collapsed. So very impressive.
Yeah.
Kenny, you're the man. That was awesome, dude. Seriously.
Guys, have a great one. I won't see you tomorrow. You're in the capable hands of my partner, Solid Jello. If you want to learn even more about VWAP, this guy took what I showed him 12 years ago and has created an entire algorithm, and it's just absolutely fascinating stuff. If you haven't seen it yet.
I hope we see you Monday. Will we see you Monday? Can you promise that?
Maybe Tuesday. I don't know.
All right. Good Lord.
Good luck in Miami, my friend.
I got my travel
if you need anything, call me.
I got my salon paws, my Bengay, my oxygen tank, and a bucket full of Adderall. So let's go. I'll see you on Monday.
Oh,
all right.
Too good. Bring in Chris, because I got to hop, but I want to say hi.
Yeah, let's say hi.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Verrone.
Hey, guys, what's going on?
Good. You look so presidential. Look
at you gotta look the part. You gotta look the part, right?
Dude, you look great.
How you doing?
No complaints. It's a bummer I got to hop. But I wanted to make sure that I want to hear about, I was telling everybody in the audience, you obviously do a lot of technical analysis and, all the behavior stuff that we do, but your boots on the ground, it's very impressive. You're traveling, you're talking with investors all over the world. So I definitely want to hear your thoughts on that. The sentiment in Asia towards Chinese equities, very curious on your thoughts on that. What you're hearing in Germany. And Europe in general. I know you go to Geneva and things like that. So I just want to hear your thoughts on all that stuff, where we are in the cycle. All right, I got to hop. I'll be listening in.
See you, JC.
See you, Chris. Adios.
See you, bud. Hey, Steve. How you doing?
Good. He's bummed, I guess. So he wanted to get his questions in. So, Chris, you really do. You travel all over the world. You're talking to clients. You're talking to people. And in this kind of market, you're probably getting some newer, different questions. What are you telling them?
So I think what we continue to learn repeatedly in our career is that there is one undefeated rule of Wall Street. And the undefeated rule of Wall Street is very simply price action shapes attitude, not the other way around. Price action dictates how people feel. And I think the challenge that we had kind of post-election into the start of the year was expectations were really full domestically. They were probably pretty light in other parts of the world. They were light in Europe. They were light in Asia. But expectations, the bar of expectations was certainly very high. And I think what we're reconciling with here is kind of the chipping away at that sentiment that was so ebullient post-election. Yeah. The good news is I think we're actually getting pretty close on the sentiment side. And Steve and JC knows this as well. I have what I like to describe as the 70% rule. My 70% rule is I want 70% of the stuff I look at generally telling me the same thing. And I think on the sentiment front, you're somewhere in that category here.
So, Chris, you have a list of risk assets and you're weighing the evidence. You want to see 70% are giving you a green light, basically.
Yeah, and I'm talking here first on the behavioral side. And the first thing I would say is what was it, 2 or 3 weeks ago when that AAI survey flipped more bears than bulls. Of everything in my sentiment stable, that is the one I care least about. And I say I care least about it because I know the sample. I'm skeptical of the sample there. It doesn't have the history as something like II or Consensus Inc. And also remember, it's measuring what people are saying, not necessarily what they're doing. So if I was going to toss one out and say, this is not, I think, reflective of something that back tests particularly well, it's II.
It's the noise. It's the noisiest, right? And so you wouldn't be.
It's extremely noisy. Now you could smooth it and all that, but I don't want to manipulate data. The II survey, which we have back to I think 1960, back test bets, and that one yesterday flipped. Right, you got more bears than bulls there.
Yep.
My colleague and partner here, Todd Stone, has certainly noted in his work that you're seeing the swelling of ETF volumes on the inverse side, right? So the inverse Qs, the inverse S&P. So that's reflection of anxiety. Monday morning or Tuesday morning, I came into the office and my Bloomberg stream was just negative headline after negative headline after negative headline. So the headlines are getting there. I'm sure you guys have noted this VIX curve inversion is pretty dramatic here. And then lastly, what we don't frankly have, and I don't know why, is we've seen nothing in the put call data. It's probably been the biggest surprise to me in the last 2 or 3 weeks. I would have expected we would have seen a couple days where you would have seen put call ratios really, really start to swell. So that hasn't happened yet, but I think 70% of the call is coming together that we're in the ballpark of some good tradable tactical rally.
I saw that put volume was at record highs, but nothing from the put call. Do you look at that differently or weigh it less these days? I know a number of people who tell me it hasn't been the same since 0 DTE.
So it sounds like the correct answer. Oh, it hasn't been the same since the 0 on day options. But actually, put calls brilliantly until about 6 weeks ago. So I think, has the market structure changed so dramatically over the last 6 weeks where we should totally discount this indicator that's treated me well for 20-something years? That's my struggle there. But again, I go back to the 70% rule. That is the one outlier at the moment. I think on balance, generally you're in the zip code. Whether it's 55.50 or 54.75, I don't know, but I think you're in the ballpark of what will be our first good tradable rally out of this condition. And Steve, you know, and JC knows, and the viewers know, corrections have two components. They have price and time, right? Price aspect of this has been pretty meaningful. The time component, I do think, is where there may be some more work in front of us in terms of repairing this and building the next phase, because I don't think you want to get too bearish here, but I do need to recognize, every problem begins with a small problem, right? Every 30% down move began with a 10% down move. So your alert or your alarm system does have to go up. But one thing we've just noticed the last couple of weeks is as markets come in. So over the last 20 days, S&P is down about 10%. Over that same 20-day period, double B corporate Parets are only up about 25 basis points.
Okay.
Credit's been proportionally stronger than equities have been weak. And I get much more worried when it's the other way around. If we were sitting here and saying, oh my goodness, double B spreads are up 125 basis points as opposed to 25 bits, you'd be like, okay, something here is changing. Also, remember, the financials went into this as your leadership. It doesn't mean that they would be immune or not get hit in a correction. Everything gets hit in a correction. But I don't want to forget they went into this in a pretty strong position. I think they're more likely to come out of this in a strong position, say, opposed to tech, which frankly did not enter this in a particularly strong position.
Tech has been messy since last summer, really.
People thought we were crazy last summer and fall when we were screaming that semis were in a bear market. Because you'd have like NVIDIA just at the highs, Broadcom at the highs. I'm like, look at AMAT, look at Lam Research, look at ASML, and I almost wonder, like, are we almost to the phase where you've had a proper cyclical drawdown in all of those other settings, and the next phase is those outperforming the ones that still have more to go on the downside? Is that Broadcom? Is that Nvidia, et cetera?
So when ASML basically came out and warned us about the whole space and what stock was down like 16%, we're about 5 months removed. That was last October.
They weren't lying, right?
Wow. Yeah. It's crazy when you look at semiconductors. We tend to go to two of the indexes more than anything else, XSD and SMH. They would have shown you two very different pictures, leading up until and in the time since last summer. XSD is the equal weight, SMH is the cap weight, driven by stuff like Nvidia. Is there one that you would prefer? Because SMH would have masked this.
I think you're at the point here where the equal weight probably starts to outperform the cap weight in semis. I was thinking about this in context of Nvidia. This secular move in Nvidia didn't begin in May of 23. It began in 2015, 2016. If you kind of look at when was the big secular breakout for Nvidia? It was late 2015. And what have we seen in this secular Nvidia bull market is that every 3 years they clip at 50%. So regardless of what's going on in the world, they clipped at 50% from late 18 into 19. They clipped at 50% from 21 to 22. Oh, here we are. It's 3 years later, 2025, right? Down 50 on Nvidia's, 75, 80 bucks. We shouldn't be shocked with that outcome. Is it the correct call? I don't know. Only the big man upstairs knows, right? But we shouldn't be surprised with that outcome, particularly for a stock that is in a downtrend. Did not make really, aside from a fractional new high, really never made a new high since summer. That I think is the big change.
It's in the same range it's been in since early last year.
And Steve, and I think you could say juxtapose this with some financials right now, because financials and tech are equally flushed here in the near term. I think both are likely to rally sharply here over the next number of weeks.
Right.
But one of them has the majority of its issues still in uptrends, and the other does not. And so if I'm playing, blackjack by the book, I know where I should make a more concentrated bet right now.
Yeah, and you got to ask yourself too in these times, what's my time frame for these trades that I'm about to put on?
Yeah, totally.
One of the charts we've been looking at, I want to move on from semiconductors, but one more. We've been looking at these massive tops. If you look at XSD relative, there's a 4 or 5 year top. SMH has a much smaller top, but still a little tactical top there. It matters. Do you think if these patterns were to complete, right, and semiconductors lose their leadership, this is perfect. Thanks, Fonz. Is that bull market over? Broader markets in trouble? Do we need semiconductors to lead to think, okay, we're in an environment that's conducive to rising prices for risk assets?
I actually think, somewhat controversially, if the bull market and everything else is going to continue, you don't want semis leading here, right? If this whole thing is predicated on the promise and future of AI, it should benefit all companies, not just chip makers, right? So I actually think there's a bit of a contra argument to be made here that that Nvidia breaking, while painful for Nvidia, is actually quite bullish, because it reinforces kind of this democracy of tech, that prices go down over time, and we see it with the chip prices, and therefore the rest of the market can kind of emerge out of that. Now, that said, we're in some adjustment period here, and there's clearly been some rotation to defensives. I would probably rank defensives as following. I would say utilities are probably they probably have the best relative profile in our work right here. I'd say healthcare is second, on the come. And staples is the one I'm probably most skeptical of, or the one where I think, okay, you've seen a big rally in staples here in the last number of weeks, but there's still bad charts in what is generously bad long-term trends. I could be more brutal and say they're miserable long-term trends. So I'd say staples are the ones I'm most reluctant to kind of believe here. Healthcare, I think, is on the come pretty legitimately, and utilities are more established in their leadership position.
And where are financials on that list for you?
So when we look at our sector rankings, kind of right now, these are objective. They're not driven by any opinion of mine. And as I always say in my meetings, my opinion is meaningless. Don't listen to me. Listen to the market, right? Our objective rankings, our model-based rankings, have financials 1. They have comm services 2. They have utilities 3. Healthcare is moving up that list. It's now a middle of the pack sector. It used to be a bottom tier sector for a long time. I see someone notes here in the chat the insurance stocks. Yeah, a big part of the financial leadership during this correction has come from these insurance stocks. But then you get to like discretionary industrials and tech, which are no longer top tier sectors. They are at best kind of middle of the pack. And I think, Steve, one of the things that we've been so vocal about is if you look at tech's relative performance versus S&P, do you know what data peaked? Just out of curiosity.
It peaked last summer and peaked at those dot-com bubble highs, didn't it?
The exact day, July 10th. Do you know what also happened on July 10th?
No.
Dollar yen peaked. So,
you know, I texted Todd Sohn today and I said, what should I ask Chris? He said, ask him about the yen.
There we go. Right. So now I've wrestled with the yen call for a while, but I think it's so easy in a long-term bull market like tech has been in, a long-term relative bull market like tech has been in, to like really believe the management and the stories, and often they're good stories and good managements, but you also forget that there's like other stories running parallel to the fundamental story. And I think in this environment we've been in for the last decade, you've had this weak yen global carry story that's been running at least parallel to tech. So the fact that they both kind of have shifted at the same time would lead me to come to some conclusion that, you know, how money moves around the world is still largely very much driven by yen carry. So I think it's a really important relationship. Is it going to hold up in a PhD level stat class? Maybe not, but I think there's something there.
You know, if they're moving together, you don't always have to know the reason why, you know, at the moment. Sometimes you figure it out in hindsight. So it's about interest rates, and that would make sense for tech. They've always traded with interest rates, this group. And
ironically, have traded, sounds crazy. They've traded better with rates up than rates down. I know that sounds crazy. Look at 95 to 96, Fed starts easing, rates come in hard. Tech has its worst 18-month relative performance stretch of that entire 1990 decade. So, like, just be a little careful. And this has always kind of been something I remind myself, like, be a little bit careful of what you think you know before you actually go and do the work.
Well, the companies that move the tech indexes, right? They're net lenders at this point. These are the biggest cash cows in the world, right? They're not the speculative growth stocks, the ARK stocks, who are relying on the bond market and low interest rates to stay afloat.
It's funny. I was in a meeting with a big energy, well-known energy PM a few weeks ago, and he was like, "Man, if my energy companies were announcing the type of capex these tech CEOs are, my stocks would be down 80%.
Can't imagine.
Right? Because it's like, I mean, what's one of the first things you learn in strategy school when you're 20 years old? You learn that don't own stocks that are in a capex cycle.
Yeah.
Right. And that was always the lesson of energy. And somehow tech has escaped that, what has been a pretty binding constraint.
The tech sector just continues to rewrite all these rules for us as they go.
Yeah, like, listen, I don't mean to sound too brutal here. Every chart in tech is not bad. But my point is it the flag holder of leadership like it has been in the past? And I think that's a bit like, this is not the first correction of this bull market. You know, go back to kind of the most recent kind of real potent one was fourth quarter of 2023, right? Remember, into that October 23 or November 23 low.
The long one.
I mean, tech corrected meaningfully, but one difference. As it corrected meaningfully, it still outperformed, or it still sustained its relative profile. That is the difference here. It didn't come into this as a leader. It certainly hasn't been a picture of safety during this corrective phase. I do wonder, I was on an airplane on Monday night and the Wi-Fi didn't work, which I actually prefer because you actually have time to think then as opposed to just like doing whatever silly stuff we do on our phones. And I wrote down some things, and I wrote down two things. I said, reminder, Chris, corrections end on bad news, not good news. I don't want to forget that, because when you look at hindsight, right? When you look at hindsight, you say, oh, that was only a 10% correction, or it was in a long-term bull market. Yeah, when you're at the low of the correction, the news is so bad around you. If stuff bottomed on good news, this would be easy.
Right.
Point one. And point two, I don't want to forget that one of the last phases of the correction is often they come for the piano player, right? They come for Walmart now hit, Costco now hit. I wonder, it's not on the chart yet. And the problem is, like, I own it and I love it, but does gold need to get hit here? Right? Does gold getting sold, would that be okay? They've come for gold. Now we can carry on. We'll see.
I was wondering that about international equities as well.
Yeah.
There might be some tech stocks that you like over in China right now.
It's funny. I was in a meeting yesterday, big growth shop, and I was talking about, like, I'm embarrassed to say I like all these Chinese tech charts so much better than the U.S. tech charts. I can't even pronounce the names, but here they all are. It's just good chart after good chart, and kind of like we've been using this. And it's funny. It's like I've been bullish China since like last February, last March. It's been a freaking grind, right? Because it's not been easy.
Wild rides.
I've been stopped out and bought back into Baba. I don't know how many times over that, and Tencent and all those. And I'm like, okay, I'm a China bull, and even I don't have enough on right now. So in the spirit of, Marty's why he used to always talk about, you can be philosophically bullish, or you can actually be there with your money. And I am philosophically bullish China, and they're small with money, and that's me as a bull. How about everyone else? Like, how could people really be there with dollars yet? And it's funny, the cover of Newsweek a few weeks ago, I don't know if you saw it. It was like the most bearish China cover. I'm like, they're 10 years late with this cover.
Oh, it's crazy. And Chris, a lot of the people I still talk to now are never China people still.
Well, Steve, it's like, I'm always asked in meetings, is China investable or is it uninvestable? I don't know, and I don't care.
What kind of question is that? Chris, when the word uninvestable, just like it gets me, unlike anything else. When I hear it, I'm like pausing the TV. I want to hear, like, what's uninvestable?
I guess my point is, there are people who can make that judgment for themselves. I am not that person. I am just simply here to show you things you may not know, or show you avenues with which capital will be treated well.
Yeah. And we understand all the disaster possibilities and stories that people tell out there. However, this is probably a generational buying opportunity if none of that ends up being true, because these are the biggest, baddest tech companies in the world. And something like Baidu was literally recently trading at single-digit price-to-earnings multiples.
Steve, now I'm gonna call you out with something you just said. No offense, right? You say this generational buy. Who knows if it's generational buy? Who cares if it's generational? Why does everything have to be generational? Right? Like,
it's one of those shitty phrases. You're right.
Let's just see. No offense. I didn't mean to call you out.
A big buying opportunity
in front of your legion of followers.
It could be a big buying opportunity just because of how depressed sentiment and valuations are, and you get beautiful trend reversals. What are you hearing when you travel to Asia about stock markets over there?
Well, I'm going there in a couple of weeks, so I'll have a better kind of idea in a couple of weeks.
Yeah.
Also going to Europe in a couple of weeks, so I kind of have a busy March and April in front of me, just in terms of talking to people. What I would say is, I was international last week. I was in Canada last week. It's like they're taking the tariff stuff pretty personally. I'm like, I come in peace, right? I come in peace.
Yeah.
I think that, again, kind of what we said at the top of the call here is, we're always reminded in corrections that, price action shapes how you feel. You never, think of something and then wait for the price action to do it. It's the other way around. So I certainly think we're getting close on a sentiment front in that regard. I think it's funny that all these headlines talk about, like, uncertainty, like as if any other moment in your life is certain. I like talking about pet peeves. Uninvestable is a pet peeve. Generational is a pet peeve. Uncertainty is a pet peeve, because everything is uncertain. But and frankly, when you're most certain, it's probably when something is going to get knocked off the table on you. I was given the metaphor yesterday in a meeting. I have 3 kids. I have a 7-year-old girl, a 5-year-old girl, and a 3-year-old boy. My 7-year-old girl loves to do puzzles, and it's like she'll lay them out over the dining room table, And the other day, she was like 80% complete on this like beautiful puzzle. And my 3-year-old son comes up and just whacks it off the wall table. And I'm like, I look at my wife and I'm like, sweetie, like that's what I do every day. The second I think I've got it, I've got the puzzle pieces, I'm close. Something happens in the world, and
That's great.
Right?
Love that. Chris, I love the news and the reactions, right? And paying attention to sentiment and the way that stocks react. You alluded to, we're not going to bottom on good news. How about, were you paying attention to some of the earnings just last quarter? It seemed like these reports were just as good as they were the quarter before and the quarter before that, particularly for like the Mag 7s. They stopped getting rewarded for what seemed like pretty excellent reports, based on my standards.
Exactly. That thing I said about, not going to bottom on the news. You're not going to top on bad news, right?
Yeah.
Like that's I can remember, go back and look at the transcripts from 2000, 2001, 2002. Like Cisco never acknowledged a problem until like a year after it topped. It was down 60% by the time it acknowledged a problem. So listen, I think the relative decay in a lot of those stocks, not all of them, began last summer, as you and I both have observed. Have they have good earnings this cycle changed how they're behaving? No, if anything, it's reinforced this negative feedback loop that we seem to be in. Now, juxtapose that with, I remember back in September, October, like you had all these like China-related Euro luxury, Euro autos start to report like the worst possible numbers, and they couldn't keep the stocks down. So like, that's the inverse, right? That's what you want to see. We're in some.
That's right.
We're in something opposite.
Europe. You talked about how gold, does it have to catch down, right, and follow all this weakness? Are you thinking the same way about any of these international leaders? Like Europe right now looks so good. Doesn't look like the S&P 500.
No, like Steve, I say that about gold. I'm looking at it on the screen here. It's like one of my largest personal holdings. So, and I'm not a gold bug. I just like the charts. So it's one of my largest personal holdings because
it's a great chart.
It's been just as good as equities for 2 years. So it should be. I guess my only very tactical concern is in corrections, they shoot them all. And does that have to, now it's very benignly working off this overbought condition. And, Todd has noted in our work that the GLD flows have probably gotten too aggressive, and you can see it pause from there. Copper's perking up here a little bit, so maybe there's some shit going on in metals, but it's still a good chart. I was not trying to say gold's on the verge of some bear market.
No.
When I look globally at say Europe or Asia, I mean, these European indices are getting slapped around a little bit over the last couple of days, but as I noted. With respect to the domestic picture, it's similar in Europe in the sense that there's nothing happening in credit there. Like there's no deterioration in European banks and there's no deterioration in credit. So I would be pretty inclined to buy an oversold condition as it presented itself.
What do you make of the strength in European financials? Is that something we should look at and be like, oh my gosh, that's just so risk on? Or is that's just their own thing?
Where you've been for 2 years, it's like it's been happening for 2 years. So it's like people just waking up to this now.
Right. Some of these banks,
Euro banks, Japan banks. I mean, these things have been the leadership, ex-US, or the macro leadership for a long time.
Latin American banks are starting to pop up on our scans.
Yeah, I got to go take a look at those Brazilian and Mexican banks again. And NU was the one that kind of got really hammered over the last number of months. That was a momentum stock, right?
Yep. That's Brazil. When you think about some of these emerging markets, whether it's the Brazils in Latin America, or even I'm thinking a lot about Southeast Asia these days, a lot of these charts do not look good, right? But in the case of, say, Southeast Asia, doesn't China kind of drive that whole region? Should I expect countries like Thailand or Malaysia to get off the ground here and start following China higher, or is that too simple?
I mean, sure, it sounds logical, but like we can hypothesize all we want. Let's see if it happens. I would think about it maybe a little bit differently in regard to think about the last year, right? Why were people so bullish on India? Only because it had worked for the prior 5 years, right? The story develops because of what something has done. And I remember, like, in the months leading up to the election, like, the big call out there was, oh my God, if Trump wins, India is just going to get better and worse for China. I mean, the market interpretation has been 180 degrees differently, right? So either your story is wrong or the market has a new story or something's changing. I'm an India bear here. It is oversold. It probably bounces, but I think you put in some big tops and some important stocks in India. And then conversely, I think you put in some major bottoms and some very important stocks in China.
And how about just the money flow situation there? You know, asset managers are probably just following the trend here. India's rolling over. China starts to work. 5-10 years ago, if you looked at the emerging market allocations to something like India versus China, China was huge. India was very small. Now they're about the same size. In other words, a lot of money poured out of China into India. Now it's just going back. No,
you know, I'll make two last points, Stephen, and then I got to hop to a 9:30. But first thing on China, Todd has noted this as well. The structural outflows from China, right, have not changed with this rally. And it's funny, people are like, oh, it's just a rally in China. It's been happening for a year. The market bottomed 15 months ago, right? It reminds me like here, like 2010, like, oh, it's just a rally. Right? No, market bottomed a year and a half ago, right? And then second, the missing piece I thought in China was the bond yields were in free fall all last year. Go look at the bond yields. The 2-year yields are up. The 10-year yields have turned. So how do you escape financial crisis? You can't have the bond yields in free fall. Guys, I got to hop. Steve and Spencer and everyone, thank you so much.
Thank you, man.
Thanks so much, Chris.
Yeah,
Thank you.
All right, there's a lot there, Steve.
I mean, he's always so generous with his time. Aren't many people that I would rather talk to right now. I mean, Chris is just in the weeds of all this stuff as much as anybody that we know.
I liked what he said about how he's been bullish China, and I thought he said Baba specifically is what he was referring to for a year, and how not easy that's been. And I was looking at it as he was talking about it because I just pulled it up, and yeah, you could have been bullish Alibaba all of last year. The thing had 6 green months, which means it had 6 red months, right? Like it's, and then you have the outliers, right? Well, the outliers being I was just looking at the data, so now I got to go find it again. The outliers being well, obviously February, January of this year, right? And then September was the big month, right? But like outside of that, yeah, it's not easy. So
I began accumulating a lot of those bases early last year, and then I ended up getting stopped out of a lot of it.
Yeah.
It wasn't until the fall where we had the momentum thrust, the initiation reading, where I stopped getting shook out. Because at that point, the way I do things, once I see that's like a new bull market signal, right? When you get that kind of a historic initiation reading. So at that point, what I can do is really lower my stops and let these things dance, right? Because I know they're going to eventually buy this dip. But there was a nasty correction, Spencer, even after that.
There were always 3 red months in a row to end the year, right?
So it's not, look, we talk about these things like, oh, why don't you just own China? I'm glad that Chris brought that up because even trades that sound easy, they're never easy.
Yeah. Well, one thing I actually wish I'd popped in. I always wish I'd pop in is when he was saying when he was in that meeting and he was saying how he likes these Chinese tech charts. The secret has to be out, I would think, unless I'm just my bias is shown because that's all we talk about over here. But like, if you don't understand that, if you don't see China right now, if you haven't seen it, then like you must be under a rock, I would think, right?
The problem is it's been so bad for so long for this group of stocks that people have implemented never rules.
Maybe I'm wrong because it's only really been, I guess, like I said, a couple of months, right, for China here. So maybe I am wrong, right?
These international trends, these big theme trends, factor trends, small, large type trends, these are run by the big money and the institutions, right? Think about it, because this is stuff that the institutions are investing in, right? Themes like this are going to overweight international, overweight value, overweight growth, overweight. When they get into place, there's such a chase dynamic. They don't last for 3 months, 6 months, a couple quarters. They don't last for 1, 2, 3 years most of the time, right? These are super secular trends. We're talking 10, 15, sometimes 20 years. Because they're run by the money flows, the big money flows.
Yeah.
And then there's this chase dynamic where, like, Chris is on here now saying half the world, and I agree with him, I'm saying it too, half the world is still saying never China, and they don't want to invest in China. It's uninvestable. It's not even an alternative. It's not an option. Give it 2 or 3 years of China outperformance, those rules change. And all that money that's still on the sidelines keeps coming in. What's that do? It just fuels the bull market further. It's just added juice, right? And that's how these trends just last and last and last. They have these chase dynamics.
And from what little I know about institutional allocation, it's like turning a cruise ship, right? Like they're not the most nimble places in the world, right?
You got to have a meeting, get it approved, right. Talk to the board. You got to call your clients. Then you got to call the broker. I'm sure it's a pain in the ass.
Right.
And it takes time. You know what else takes time, Spencer?
No.
Change people's opinions, right? So this is a big part too. I talk about it a lot. I think another thing that we might underestimate, a lot of us, is just people's views of their portfolio, right? I talk to people when we travel and when we do certain like money show events. I can't tell you how many people told me I'm a U.S. tech investor. I'm a U.S. growth stock investor. This has become a thing.
Well,
right?
it's been 16 years, man. What?
Absolutely, right? So they have every reason to be a U.S. tech investor. But imagine 3 years of U.S. tech not working while China or Europe does.
Well, that's the thing.
You're not going to be a U.S. tech investor anymore.
That's the voice that's been in the back of my head for the past couple of years, which is like, because I know JC loves to talk about that period from 2000 to 09, right, where energy kicked ass and the BRICS, right, whatever, XUS, whatever.
What a time.
I don't know. I wasn't around for it, but obviously I know that it wasn't always this way. But how do you argue with the last 16 years if you're someone like me or you? I mean, it's hard. So,
right, a lot of people have never seen anything different. So it's a slow, gradual reprogramming, right, that will show up in a long-term trend.
And or we have seen it different, Steve, and it was like September, right, in October and November in Alibaba, where you get this crazy outperformance for like 3 weeks, and then too bad, you missed it. It's over. Too late, right? And
the wild to trade.
Yeah.
But that's why they come with beta, Spencer, and some of us are really into beta.
It's true.
So
that's true.
Sean, do we have Sean? Because Sean could come on and tell you a story. This happens. We get so emotional as humans. I think Sean might still be a never China person. We went there together. We had some experiences.
I might be a never China person, right? Like I don't even know where I stand at this point. I mean, like I said, I've got enough international exposure, like very, very, very broad international exposure, as broad as you can get, basically. But I don't.
Dude, you could dabble. Like, I think for people like that, I'm not ever going to tell somebody you're crazy to say never China. I get it. All of the reasons are valid. Absolutely. Right. But you could argue it's not about that. It's just about making money. Well, then you could say, oh, no, but these stocks could be delisted one day. They could get Russia. Okay, I get it. Right. There's a risk of some crazy stuff going down. How about if that doesn't happen and you could buy the Amazon of China or the Google of China or God forbid the Apple or the Tesla of China at really like bargain basement multiples, low double digit price to earnings multiples. You don't look, Apple's trading like 30 times still.
Now you want to talk about value? You want to talk about that? I mean, we can talk about that if you want. But
it's Spencer, this is a region of the world that we used to talk about like it was the most exciting thing in the ever. With all the growth in China.
Oh, but Steve, I was told that it was a demographics play is what I was told. I was told it was just a simple demographics play, and everyone in China is going to be on the internet, and they're not there yet, but they're going to be soon. Dude. And that was 10 years ago.
It's what Chris just said. They build the story around the price action and the trend. You know who the big demographic story is now? The one that's been working for the last 5 years, India. So,
all right.
Get Sean on. I'm gonna go.
A couple things. Sean's here. Okay, before I bring Sean on, I'm watching you, Intel. I'm watching you up 16% because you got a new CEO. I'm watching you. Also, shout out to retail. One of the reasons we're excited to be working with Jeff Mackey is the dispersion in the space is off the charts. Every day there's a retailer that's down 15% and or up 15%. This morning it's G3 Apparel, billion-dollar company, up 16% on their earnings report. These stocks, speaking of beta, these stocks have beta. So, all right, let's bring in Sean and we get Steve back on here, and then we'll hop out. How about that?
All right, I see Steve outed me as a never China guy.
He said he might be. He said he's not sure.
Well, he's partially correct. He's partially correct. For a trade where I can define my risks, I have no problem investing in or trading in China. In fact, I have some China positions on right now. But if you were to ask me to put some long-term investment dollars in China, that's where I get a little skeeved out about. I don't think I don't think I'm breaking any news here when we say that trusting numbers out of China is problematic. And if you're an investor, you gotta have something to lean against to keep you in the trade. I mean, investors aren't watching charts that much. I mean, yeah, they are tactical entries, but you got to believe that business is on the up and up if you're a long-term investor. And I don't know, I'm not convinced on that in China, but I'm happy to trade it all the time, anytime.
Yeah. That's the caveat is you specifically can always control your risk, right? So
That picture of you and me, Shawnee, at the China Club, put it right here on my wall for the entire duration of the China bull market.
I wish people could see a picture of me and Steve sitting in the China Club, sweating our asses off, nervous that we're about to get our heads cut off because we don't look right.
Didn't I not have like a jacket or something?
No. We not
I know
only
what you mean we didn't look right, but
not only were we
violating
like
dress code.
Yeah, not only were we like the obviously American guys in there, where American guys are not very welcome. So that was the first problem. And that's the bigger problem. But the second problem was everyone in this club, it's like, everyone's wearing suits, everyone's wearing nice. Steve and I are dressed like we're having a day at the beach. We're wearing shorts and flip-flops and just
We're touring all these countries. We've got 2 days in each country. We basically have handlers bringing us from meal to meal, and some are incredibly casual and others are incredibly fancy. And Sean and I get dressed in the morning. We're pretty much out for the day.
Yeah,
things
we were
happen.
not given the memo on the dress code at that place.
I had to. I got stopped at 2 restaurants, and at another restaurant. Do you remember that was Hong Kong? They gave me pants. Do you remember that? And you guys were like fine with it. You're like, yeah, go to the bathroom and put the pants on. I'm like, can I leave?
all right. I don't know.
That happened, Spencer. Put on, and they were tiny. Obviously, the tiny little pants. I couldn't even zip them up. I had to pull. It was bad. It was
yeah. Steve Strazza's body type is monster size in Southeast Asia.
All right, Sean, what's on your mind here? Activity wise,
I do have something kind of big on my mind because I've been getting a lot of questions from people, and this is not a trade idea, so I apologize for that, but I think it's relevant to a lot of traders. It's been fun over the last couple of weeks watching Steve and JC kind of argue about is this a bear market, is it not, and Steve likes to put out a lot of facts only about what's going on in the market, and JC likes to come back and I'm like, well, look at Germany and look at the Polish zloty. Great. I don't know anybody that trades that shit, and I don't think Steve does any either. The rest of us who are trading in the US, if you're anything other than a day trader, which by the way, I'm jealous of people like Kenny right now, but if you're anything other than a day trader, this is a tough market. If you're a swing trader like I am, it's tough holding positions. And so I've had a lot of people in various different ways expressing frustration with me, just like saying, hey man, they're commiserating, like what, how do we get through this? What's going on? And so I wrote in my note last night, which by the way, Spencer, if you want to drop my newsletter sign up, free newsletter sign up, please get it in there. But I wrote in my note last night about one little hack that I have learned over the years. In fact, I learned this from another great trader, Peter Brandt, that helps. It doesn't solve the problem, right? It doesn't eliminate losses. It doesn't eliminate portfolio drawdowns, but at least it helps me keep my head in the right space. All right. And that is, as a trader, and the way when I track my performance, instead of watching and focusing on my equity as it up and down intraday or from day to day, instead of focusing on the equity, which is going to be volatile in a tape like this, instead, have a spreadsheet where all you do is you post up your closed trades. So whatever the P&L on that trade was, if you made $100, if you lost $1,000, whatever the number is, track it on that spreadsheet sequentially as they close. So as you post up a closing trade, boom, it goes to the bottom of your spreadsheet and it just adds to the totals. And one thing I have found during this pullback that we've been in, Steve, is that my equity has been getting, not been fun. But if I'm paying attention to my closed trades, I've actually posted up a bunch of winners over the last few weeks. Now, the winners that I'm posting up were much larger winners, a few weeks ago, right? I've given back a lot of gains, but at the end of the day, getting out where I got out, there's still wins. And I don't know, it helps me feel like I'm still in the game, right? If I'm just focusing on that, I'm saying, okay, I'm still closing small losers like I'm always doing, but I'm throwing in a few winners there as well. And that just it's like, okay, the sky's not falling. All right. Things are okay. You're following your process. You're adding wins to the tape. And when the market improves and things start going up, you'll be ready and you'll be in the right headspace for that.
If you're only looking at the equity curve, which is the change in the market value of your account, well, you have other stuff in there, right? That's changing in value on a day-to-day basis that maybe aren't recent trades. It's just stuff that you've been holding. So you can't analyze your current performance. Hey, how did I do these past couple of weeks that way? You got to isolate those trades and analyze them. That's really what you're doing.
Yep. And so in a tape like this, like I said, it's kind of keeping me level because, hey, I'm posting up all these wins. Yeah, they're not as big as they were 3-4 weeks ago, right? But that's open profits. A lot of old school futures traders will tell you the profits aren't yours until you close them, right? Open profits mean nothing to me. It's the market's money until I close the trade. Whether you believe that or not, fine. But here's the flip side of that, Steve. I also find that in markets that are doing really well, like a market that we had, say 4 or 5 months ago, I had a bunch of open trades with big open P&L that were going really well. And if all I did was look at my equity curve, I'm going to think I'm the greatest trader in the world, right? And then I'm going to start swinging for the fences, probably at the worst time to swing for the fences, right? Instead, as I'm tracking my closed my closed trade spreadsheet, the only trades that are getting added to that spreadsheet during a time when all my trades or many of my trades are working, the only trades that are getting added are the small losers, right? I'm pulling those out of the portfolio, taking them off the thing, taking small losses one after another, and I'm looking at that going, oh man, things aren't going so well. And so that kind of keeps you balanced, right? I don't get too high when the market's doing well because I see all these losing trades getting added to my blotter, small losers. And then when the market's coming down, I don't get too depressed about it because I'm like, oh, well, look, I'm posting up some winners here. We've had some good trades. Yeah, they're not as big as they were, but that's a win. We'll put it on the board. I don't know. This is just a mental trick I've learned over the years. My friend Peter Brandt taught me that many years ago, and it really stuck with me. And it just helps keep me level. Again, like I said at the top, this is not going to solve your equity curve problem, right? Your equity curve is going to do what it does, and we can't control that. But the more we can do to keep our emotions in check will prevent us from making bad mistakes, because the time that we traders make the most mistakes is when we're flustered, when we're either flustered and frustrated, or when we're so full of ourselves and we think we can't do any wrong. That's when trouble happens.
Sean, do you find yourself just doing less in these environments?
I find myself right now wanting to do less.
But are you not actually? No, seriously.
I have been active, not overly active. I mean, certainly less active than normal, but I still think I'm maybe more active than I should be, and I would like to dial it back, and I should take my own advice.
Go for a hike today.
Well, I'll be doing that next weekend, which I'm excited about. But yeah,
where are you going?
I am going to the Santa Cruz Mountains in California, and then to the Redwood Forest again for a quick little one-day trip.
You were just there last year.
It's my happy place, Steve. It's my happy place.
You've been getting around to all these different hiking
for those of you who've never been to the Redwood Forest in extreme Northern California, right near the Oregon border, to me,
I want to go.
That's the most beautiful place in the country. But you know, I'm different.
I want to go. No, we're doing a West Coast trip. I don't know when this year, but I want to go to like Montana, right, and see that kind of situation, and then maybe just keep going west from there. Maybe make it over to the Redwoods. I hear Lake Tahoe is something to see too, so that's on the list.
I've never been to Montana. That's high on my list too. I'd like to get up there.
It looks so cool. I heard I heard vacations are a lot more expensive now after Yellowstone.
I believe it. I believe it.
Somebody told me you should go to Wyoming. Basically, it's like right next door. You see the same kind of situation there, and it's a lot more manageable and cheaper than going to Montana.
Probably.
Fun fact is very little of the Yellowstone show was actually filmed in Yellowstone. I think it was all filmed in Utah.
Yeah.
Filmed in Italy.
All right. Let's get out of here. We got. Well, I guess Steve doesn't have to trade.
You got trades to make?
I may have just made a couple. Yeah, fast market. So here's what we got today. Breakout multiplier members. You got your video with Steve at 11. Options jam session with Sean at noon. Programming alert. Normally, we do chart requests live 1 o'clock on Thursdays. We're not doing CRL today because Steve and Jason I almost said JC. Steve and Jason are going live at 1 o'clock to talk about some of the things that are working. And I know Chris just kind of talked about maybe wanting or needing those things that are working to stop. But the thing is, they are working, right? International commodities, bonds. So Jason and Steve are going to talk about the pockets of strength today at 1 o'clock. We'll be sending emails out. It'll be on YouTube. It'll be on our site. So we'll see you there for that.
We're going to talk about ultimately the power of uncorrelated trades.
Yeah. That's it.
Robert Dunning, I see you in chat. I like that idea.
Okay.
Yeah, I'm dying to go to Jackson's Hole.
All right, then. We're done. Thanks for watching. See you guys tomorrow. Go make money or keep money. Either is good. Either works.
Thanks for watching, everybody.
All right.
I can't take no loss. I don't even know what it costs.